Good morning, Gerard. So IPF have just released their half-year results. Can you give me the highlights of the group's performance for the first 6 months of 2015?
Well, we produced a very good, resilient financial performance in the period. Underlying profits were up by 16% to 43.3 million. What was really pleasing is that we've returned our businesses to growth mode, something that we've been explaining to the market that we're going to do through strategic growth initiatives, and those are now working. We've established a digital business, IPF Digital, which is the combination of a business we acquired plus our own business. And Mexico in particular is producing an absolutely stellar performance. And we've done all of that whilst at the same time still producing very good quality in terms of the overall portfolio performance.
Now, you mentioned an excellent performance in Mexico and that business is on track to deliver its profit per customer target. What's behind that performance?
Well, it's a number of things. First of all, we have a tremendous team working for us in Mexico. They're expanding the product range. So we're now delivering some of our loans on a prepaid card. We're expanding the customers that we're able to attract. So we're going to open up a micro business unit. But we're also doing selective credit relaxation. So we're able to offer more customers larger sums of money. Now, even though we're doing that, we're still managing the credit control piece very, very tightly. At the same time, we're investing in new distribution, which really means we're opening up more offices. So we're expanding in Mexico City as well as in the regions around it. So it's a combination of factors driven by an excellent team.
Can you give me more detail on your plans for the digital business?
Sure. Well, the digital space is really exciting for us. Now, anybody who knows our business will understand that our home credit business operates through approximately 30,000 agents, and all of that really is very manually intensive. So what we've decided to do is to establish a solely digital business as well. We'd already established our own Happy Loans digital business in Poland in late last year, and to that then we acquired MCB Finance in Q1. We put the two together as IPF Digital. Now, that business doesn't have any agent intervention. Essentially, you apply online, you get credit scored online within seconds, and the money is delivered directly to your bank account. The business that we acquired brought with it 5 countries, so we're off to a really fast start, and the business is overachieving the targets that we'd already set for ourselves.
So, Gerard, what's the outlook then for IPF for the second half of the year?
Well, clearly there's a lot going on across our countries, particularly when you look at competition and also new regulation coming into some of our markets. But we've demonstrated time and again that we are capable of managing those aspects of the business. So from our own point of view, what we have to do is focus on new products, new delivery, ensuring that our advertising positions ourselves correctly vis-a-vis the customer we're trying to attract. At the same time, we have to maintain control of the portfolio quality, and we've proven that in the first 6 months. So when I look at all of those aspects together and I add in the digital business and the stellar performance in Mexico, I'm actually quite optimistic about what we can do in the second half of the year.
Gerard Ryan, CEO of International Personal Finance, thank you very much.
Thank you.
Adrian, we've just heard from Gerard about a resilient financial performance. What's driving it?
Yeah, we're happy to have delivered a profit of £43.3 million in the first half, and that's an underlying profit increase of 16%. It's been led by the top line, particularly good performances in digital and in Mexico. We've seen the growth in credit issued of 10%. We've seen a growth in customer numbers of 6%, and that's led to a revenue increase of 5%.
How do you manage impairment to get that balance between growth and credit quality?
We have a target for impairment of 25 to 30%, and our result this half year is at 26.5%, so it's well within the range. We have relatively short-term lending. Our average loan is about 14 months in length, and as a result we see very quickly when lending is good or if it's less good, and where there are opportunities to relax credit, to take advantages of opportunities in the marketplace, we can do that. But if it looks as if impairment is rising, then we can tighten those credit settings and bring it back into the range. So all of our European markets were in range, we're pleased with that. Mexico is just at the top end of the range or just above. That's consistent, it's stable, and that's allowing us to take advantage of the great opportunities in Mexico.
And finally, what are your plans to deliver further returns to stakeholders?
We have a strong balance sheet. We raised an additional £100 million in the first half of this year of new bond finance, so we remain well capitalised and over 60% of our facilities run out until the next decade. As a result, and with return on equity of 23.7%, we can move towards returning more value back to shareholders. We've increased our interim dividend by 10%, and that represents our confidence in the underlying profit growth in the business. But we also have a key metric, which is the amount of our receivables book supported by our own funds, and that's the equity to receivables ratio. Today it stands at 46%. We have a target of bringing this down to 40%. So we've announced today that we're starting a share buyback programme to bring us down to that 40% target.
Adrian Gardner, CFO, International Personal Finance. Thank you very much.
Thank you.